Hi, I'm Andrea West. I'm a senior real estate specialist, and today I am being joined with Cheryl McCarthy of Mutual of Omaha. She is a reverse mortgage advisor.
Hi, Andrea. So great to be here with you to talk about reverse mortgages.
Great. Thank you so much, Cheryl.
You're so welcome.
So, Cheryl, I think there are a lot of misunderstandings about reverse mortgages out there. There's a lot of rumors and myths that, the bank's just going to come in and take your house, that they're really bad loan products. Can we just start with what is a reverse mortgage and why does it have such a bad name?
That is great. And I can fill books.
Good.
So reverse mortgages have been around a long time. But in the late 80s, they became a federally insured loan. And what that means is FHA, the Federal Housing Authority, insures the loan, and they took it over and made it like a loan like any other loan. You might have heard of veterans' home loans, first-time home buyers. This is the third leg of that stool.
Got it.
And that's for homeowners 62 and older to use some of their equity while they're in the home and not have to make a mortgage payment. So why it has such a bad reputation is back in the day when it first started, there was no government backing. So the lenders didn't know when they were going to get paid. So the lenders went on title to the home with the borrowers.
Okay.
That's where you get the bank owns my home and that kind of stuff. But what happened in 1988 is the federal insurance. And what that means is it's a loan like any other loan. You can pay it off at any time. There is no prepayment penalty. Its technical name is a home equity conversion mortgage. And we in banking love acronyms, so we call it a HECM.
HECM. That's the heck of a mortgage. It's a heck of an acronym.
And the HECM gets paid back when the home is sold, just like any other loan.
Okay.
When you move out permanently and it's no longer your primary residence, or when you pass away, but when both homeowners pass away or the homeowners pass away. When the homeowners pass away, the heirs have 6 months up to 1 year to pay the loan back.
So if my mom has a reverse mortgage and she passes away, if I don't have the money to pay, I have to sell her home?
You sell her home,
Okay.
or you pay it off with a conventional mortgage,
Okay.
or you pay it off with other funds. So,
Okay.
so if mom had money and she could put it towards the house. But so the premise with a reverse mortgage is because they don't know, the lenders don't know when they're going to get paid. That's why they have the FHA insurance.
Got
The
it.
FHA insurance guarantees lender, you're going to get paid. Homeowner, as long as you live in this home, you don't have to make a mortgage payment.
That's so great.
I know.
It saves people so much more money a month.
And it improves cash flow tremendously.
I'm sure.
One of the other big myths that happen is when the home value is less than the loan amount.
Right? Now what do we do?
Nothing. You get to live in your home. You still don't have to make a mortgage payment. That's also part of the coverage with the FHA insurance.
Wow.
So they guarantee that no matter how long you live, how much money you've used, you get to stay in your home without having to make a mortgage payment.
So let's just use round numbers. Say your home's worth $1 million and you go to apply for the loan. I mean, is the bank just going to lend you up to $1 million?
No, that's a great question.
Oh.
So how much I can lend is based on three things: the appraised value, the expected interest rate, and the age of the youngest homeowner. So with a reverse mortgage, the older you are, the more money I can lend, right?
Interesting.
And so the lower the interest rate, the more money I can lend, the higher the home value. So one of the things that's been happening the last couple of years as interest rates have increased, the
Okay.
amount of money I lend has decreased.
I see.
And the reverse mortgage can be the only lien on the property. So we will pay off any other mortgages. That's another myth, that you have to own the house free and clear. You don't, but you have to have enough money in this home equity conversion mortgage to pay off your existing mortgage.
So if you have a mortgage of, say, $200,000 and your home is worth $1 million, they'll pay off the $200,000 as part of the reverse mortgage, and then you still get to borrow, I don't know,
X amount. So
X amount.
depends on the age. So let's just say it's 300,000.
Okay,
We pay off the 200,000, you have a 300,000, you have that 100,000 in a line of credit. That can
okay,
be used for anything. We could send you monthly payments for the rest of your life, not just for a term, for the rest of your life. Or we can just leave it in a line of credit. And the reason why the line of credit is so good is that it grows at the same rate the mortgage grows at. So if we're in a 6% rate environment, your line of credit increases at 6%.
hmm,
So it starts out at 100, next year it's worth 106, and
okay,
it compounds from there. So it's
interesting.
really good. So
That's
how
cool.
a reverse mortgage, why it's called a reverse, on a 30-year loan, you have 30 years of payment. At the end, you have a zero loan. I mean, zero balance. With a reverse mortgage,
Yeah,
you start off with payments, you start off with a loan balance,
okay.
and that grows over time.
So you've got the $300,000 loan balance, the one that you,
Let's say 200,000 because you haven't used your line of credit yet.
okay,
So every month where you used to send the lender a check
uh-huh,
for the principal and interest, that interest is going to get added to the outstanding loan balance. So every
okay.
month you'll get a statement that shows what the loan balance was, what it is now, and how much you have available for you to use.
And so once you max out, you were saying they keep making payments to you for the rest of your
So
life.
there's another great lead in. It's almost like we know this. So there are 4 ways you can access the funds with a reverse mortgage.
Okay,
One is lump sum. We pay off the mortgage, we give you your cash, and that's it.
sounds pretty good.
Yeah.
Sounds pretty good,
The
okay.
other is what's called lifetime or tenure payments, TENURE.
Right.
So then there's tenure or lifetime payments.
Got it.
And they go for the rest of your life. And so how much I lend is again based on your age and the interest rate.
Got it.
Then there's the line of credit that we've already kind of hit on a little bit. And then there's a fourth way that's a combination of them. So I have clients that we pay off their mortgage. They want some money up front to do some repairs or work around the house. And the remainder they leave in the line of credit. So the line of credit will grow for them
That's great. And so that line of credit just keeps going up until you use it.
until you use it. And once you use it, it becomes, reduces the outstanding available balance and it becomes part of the loan balance.
Oh, that's great. So you really can't overdraw that.
You cannot.
Okay,
And let's say you use the line of credit, you used all their money and you didn't have lifetime payments. That's, who cares? You get to stay in your house as long as you maintain your property tax, your property insurance, any HOA, you
right,
know, just like any other loan.
All
You
the
don't have to make a
basics.
mortgage payment. There's also an option that we can pay the property tax and insurance for you as part of the loan. And some people do that as a convenience,
And that comes out of the total amount.
the
you can borrow.
proceeds,
Okay.
correct? Uh-huh.
So if your house is worth $1 million, you might get capped at what, 500,000 you can borrow?
It's so hard to say. It
Okay.
really is dependent upon the age. The older you are, the more money and the interest rate,
Okay,
age and interest rate. So I do a lot of loans back in Connecticut and soon to do in New Jersey too. The home values are somewhat different depending on the area of the state, just like California.
Mhm.
Some home values are 300 or 500,000. Same thing.
Sure.
We just put the calculation in, whatever the interest rate is, the appraised value, and we loan from there.
okay. So interest rate, appraised value, age of borrower, and the
Youngest borrower. So one of the other things that was a great protection from FHA is it's called the non-borrowing spouse. So sometimes we have a homeowner that's older than 62, sometimes significantly older,
Right.
and their spouse might be younger.
Mm.
It used to be when the older homeowner died, they had to pay off the loan.
Oh,
That's terrible, right? You're
Oh.
dealing with death and then you have to worry about
that
financing.
sounds really bad.
So now there's what's called a non-borrowing spouse protection. So that's why we base it on the age of the youngest homeowner. So if your husband is 50 and you're 80,
Mhm.
we're going to base it on your husband's age.
Got it.
So that if you pass away before him, that when he inherits the home or, you pass away, he doesn't have to move. He doesn't have to make the mortgage payments anymore. It's the same as you.
That's great.
It is.
That's really
It's
nice.
a great protection, and
That's
I should have
really
thought of it sooner.
So speaking of kids, I have clients right now, they're trying to move closer to their children. Can reverse mortgage help them with that?
Yes.
Oh, I love this.
So, in 2009, FHA came out with the Home Equity Conversion Mortgage for Purchase, HECM for Purchase, or if you're really in the know, H for P. Um, and that allows where you used to have to do a two-step process, buy your home either with a cash or a conventional loan,
Right.
and then refinance into a reverse mortgage. You'd have two sets of fees with two sets of loans. In 2009, they made it a one-step process, just like any other loan. You get pre-approved, and we do full underwriting. So when you identify your property, you get to move in right away. Pre-approved, not move in right away, excuse me. You get pre-approved and it's fully underwritten. So once you identify the property, then you put a large down payment and you do not have mortgage payments. So what it allows clients to do is to buy more home than they could otherwise pay cash for, or get a home that has more upgrades that they want, get closer to the kids, and not really downsize their living. You know, a lot of times they're coming from a big space. Even if they're moving closer to the kids, they might not want to go into a tiny space. So this gives a lot of flexibility. And over 30 years, if you look at the outlay of the cash that you do, if you do a reverse mortgage for purchase, it's tremendous.
Wow, that's great.
It is.
That's a huge benefit. I think that really opens a lot of doors for a lot of people to buy more house, to buy in different locations. And
Right.
yeah, to have more financial freedom with that. That's great.
It is.
Good.
It is.
So on the flip side, we talked about how reverse helps when you're moving closer to kids or you want to downsize or right size. How does it help if, I don't know, life changes and maybe you're splitting up, you're getting a divorce?
Divorce in retirement is killer.
Yeah.
You know, it happens at the end of your career typically, or you're even retired. So you're not going to be able to make that money again. So you're splitting up assets. So fortunately, the reverse mortgage for purchase, or the H for P, works really well in this situation. I work a lot with clients. There's two scenarios that are very familiar. One is where one of the spouses want to stay in the home, and the other is going to be bought out by the reverse mortgage. So if there's, and a lot of those cases, the house is paid off or nearly paid off. It's got a lot of equity. The one spouse takes a reverse mortgage and pays off the other spouse with the remains. And then that spouse that's leaving the house can go purchase a new home with the proceeds from the house that they were in. Does that make sense?
Yeah. And so then they would buy a new house with their pile of money, and then they could get a reverse mortgage for the rest.
Exactly. So they would put a large down payment,
Okay.
and a lot of times be able to put some money in the bank. So you have two people now in two homes, still no mortgage payment on either.
That's pretty great.
It is. Another thing that happens sometimes is that they sell the home. So now you
Got it.
have the house that everybody grew up in or married in gets sold, and you have two exes that are now purchasing new homes with a reverse mortgage for purchase. And so they put a large down payment. How much I lend is down payment,
Right.
interest, and appraised value. What you'll find is that mortgage payments in retirement are retirement killers, you know?
Yeah.
Because you get your pension, your Social Security, your 401k, but then you're making a mortgage payment with after-tax dollars. And so you have to make that money in order to pay that mortgage. And just by eliminating a mortgage payment, it increases the quality of life, period. If you didn't have to spend that every month.
I would love to not spend a mortgage payment every month.
Yeah, me too. No, I am old enough, but I'm going to wait a couple years to get it.
That's pretty great though.
It is. It's a wonderful product. And it's really not very well known. And so I do classes all the time talking about this product, and I do it at senior centers. I do it with realtors so that they're knowledgeable. And a lot of builders in 55 plus communities really know about this.
That's
And
great.
they love it because it allows a homeowner, rather than having a mortgage payment or paying cash because you're limited by how much cash you have on hand.
Right.
If you could say, oh, I want the granite countertops and the walkout patio and get it and still not have a mortgage payment, you're really doing well.
That's pretty great.
It is.
That sounds good to me. You get to have your cake and eat it too.
That's exactly right.
Well, it sounds like a reverse mortgage can help a lot of people in a lot of scenarios. What happens if someone dies?
Ouch. Well,
Yeah.
death happens, you know.
Hate to say it.
Yeah. Couple of things. One is, in addition to grieving, you're losing your significant other, your spouse, you're probably losing income also. And then a
Right.
lot of times it's almost half of what
Yeah.
the monthly income is. So if you had a reverse mortgage, you would be able to sometimes supplement your income with those monthly lifetime payments, or at least not have to worry about making a mortgage payment. But if you're aging in place and your spouse dies, whether it's unexpectedly or expected, I've helped people where they went through all their savings to take care of their ill spouse. And when the spouse passed away, the monthly money went down
Mm,
and there was a hill of debt, you know?
wow.
So it really comes in, it's very helpful. And it's also such a trying part of your life. You don't want to have to grieve and then have to worry about
No.
financial situation
No.
too.
This has been really helpful and informative.
So
Thank
glad,
you.
and I loved it.
Yeah.
Thank you so much for having me.
Well, thank you for coming and thanks for explaining everything. And if I have a client that wants to run through a specific scenario with numbers and interest rates and their age and all that, can they contact you?
Absolutely. That's what I do. I love to talk to people, so don't hesitate to give me a call
That's
or
great.
contact me.
Perfect. That's great. Cheryl's contact information is below, as well as mine. You can reach out to either of us anytime for your questions on reverse mortgage, relocation, aging in place, downsizing, or right sizing. Cheryl, you're so great at explaining things, but I think you have a video that goes through a scenario of a couple looking to use a HECM to buy a home, right?
I do. It is quick. It's funny. It's about 3 minutes, and it's Tom and Sarah's journey.
Let's check it out.
I also have a wonderful home buyer's guide that gives you some really good information, very light reading as you're going to sleep.
I'm Andrea West. I'm a senior real estate specialist. I have a team of realtors throughout the country that are ready and excited to work with seniors and their family members to help them find solutions to their housing situation. Cheryl is here and excited to work with you as well if you have any reverse mortgage needs.
Thank you very much.
Till next time.